Good morning, guys. Welcome to this Tuesday, September 30th, last trading day of September, last trading day of the quarter. So we're rolling into the fourth quarter tomorrow, and I'm going to expect a little bit of, I think that a lot of the rebalances happened last week, but there could certainly be some more happening today. So yesterday we had a nice little pop to the upside, held on pretty good throughout the day session. Then drifting a little bit back here in the overnight, still holding that 66.95 level, so that's not a bad sign, at least to get started. We are in stage three. You can see under roll this all together. This whole distribution is now working itself to balance, and then we'll see what next piece of information is gonna either take it higher or take it lower. We'll see. So news for today, we have nothing at 8:30. We do have housing data, that's case Schiller and FHFA coming out at 9. 9:45 gets Chicago PMI, consumer confidence at 10, job opening at 10. So that's what we got going in terms of news. Then we'll see after today, if the government shuts down. I think that could be one of these things leaning on the market. At this point, the market is not really reacting a whole lot to it, but government shutdown at the end of after today, it's probably going to result in some changes. I mean, some stuff is going to stop it. Who knows how they're going to handle it? So we just have to wait to see the markets will react to it. I think from what I hear, it could just be a massive cost-cutting exercise in government spending and in government employees. So it's maybe a Doge on steroids coming in here if the government shuts down and then they let it linger. And I'm not going to get into the nitty-gritty stuff of it, but if the market starts getting concerned about this whole thing, then we'll probably see a reaction. Right now, it doesn't look like that at all. So starting off with a little bit of news here coming out today. I'm going to start off range bound and then let's see how this market develops. So not going to be very aggressive on one side or the other. I thought for yesterday that we had a shot at taking this higher, but we are in stage three. We were up here testing that three-letter ledge. It took it out a little bit and then backed off. And I would just say we stay range bound right now. Look to fade edges up to that 67.30. Look to buy edges down here to the 66.30 to 40s. And that's going to be the bulk of the area we're going to try to trade in. So looking at ES, short setups against the 67.05s, 67.15s, 67.30s for rotations back and down. I'm going to buy against 66.95, 66.80, 66.65, 66.55s for rotations back up. Maybe a couple of levels below here. Let me move this guy out of the way. But basically, let's see. Let's call this guy up. There you go. Yeah, here's your 30s and 20s. So they have after that 55s. I think we can start thinking about the short side as well. So I would try to stay in this range. And start probing below 55. The last ones I would look to buy against is that 40 and maybe even down to the 25, but the 40s for sure. And that's the range we're looking at. So we are pretty much in the middle of the range, or a little bit above the middle of the range, but just look to fade edges up to that 67.30s. That's 67.05, 15, and then 30s. Looking to buy against 66.95, 80s, 65s, 55s. Below 55s, I would start thinking short side a little bit more aggressively. Above that 67.30, I would look towards the long side a little bit more aggressively. So that's how we get started. And let's see if we get some cross currents today, last trading day of the month and the quarter. There could certainly be some interesting runs as people keeps rebalancing or try to chase performance going into the end of the quarter. And news today is I don't think any of the news today is really market moving. Consumer confidence maybe, but otherwise nothing is really mass or shattering in terms of moving the market. The big report for this week coming up on Friday, employment situation, may not be released if the government shuts down. So that could be an interesting twist as well. Looking at the bonds and the Nasdaq. So Nasdaq Oh, sorry, bonds. Let's start with the bonds. Backing off that lower edge at the 116s, holding on to their gains and heading trading around 117. So I would say that they're okay, backed off the lower edge. They're back up here towards the middle of this range in this prior distribution. So yeah, they probe to the downside, they try to take it lower. We did not quite get that move out of the middle to the downside, heading lower, and pretty much trading back up here in this range. So at this point, just stay range bound on the bonds. Look to buy weakness down here to the 115.26 to 30. Look to sell strength up to the 118s, and that's pretty much it. Now, that's the bigger picture, the F1. I would say on the exchange member chart, I would stay on the 1620 as a buying opportunity, 1614 to 15 down to that 1604s, three levels. We still have buying opportunities at 115.30 to 116 and the 115.22, but these two support areas are the ones to pay attention to if the market gets down there. So 1605, and then the stronger one I think is at 115.30. Both of them comes out, bets are off, we're heading lower. But initially, I'm going to be looking at buying against these first two. That would be less aggressive. If we're going to stick in a tight range, those will work just fine. And then on the short side, selling against the 17 and the 1706s, rotations back down. So a couple of levels up, couple of levels down. If they start heading lower, I would potentially look for a short trade below the 116.14, see if they can run it all the way down there. And the same thing above that 117.06, looking for a potential long trade after that for a move higher. I think you can, if you want to be more aggressive, you can do that already after 117, because this is the one which has been holding quite a bit. It's pretty strong resistance up here. So if they take out 117, you want to be more aggressive, you could try a long trade at that point. But breakouts are all notoriously difficult. They look like they're breaking out and they turn on a dime. So you have to be really careful on the bonds. So always keep your stop tight, and if they knock you out, so be it. So be it. Better than to get caught in a shitty trade. On the Nasdaq is pretty much in the middle of the range as well. They backed off. A little bit better distribution on the Nasdaq. And I would look to sell strength up to the 24,900s. I would look to buy weakness down here to that the 24,500s. So 5 to 900s is a range we're looking at. So initially looking to sell strength at 815, 24,860, 900s for rotations down. Looking to buy weakness at 780s, 750s, is that 700s, 670s, 640s, down to the 570s and 530s. So a bit more room to the downside on the Nasdaq, but at this point, I mean, I would just start range bound and let's see where they're going to take us. If they for some reason turns into a little bit of a rally into the close, I'll take that. Just be mindful that if it rallies into the close, I would look at that as a performance run, time to get performance going into the end of the quarter, and I would expect that to be sold beginning of October at that point. Potentially, that's usually what can happen. But we'll see. So at this point, we start off range bound. We know what to do and when to change our bias. We have the outer edges well defined, and we start trading outside of those edges. Then we start looking at the potential move out of the middle developing. So that's the bonds and the Nasdaq. Finally, oil and gold. And gold has been absolutely nutty in the overnight. Let me touch on that in a second. So oil heading lower. Interesting stuff. This started happening right when I was doing the analysis, started heading lower like that. Like, okay, that's a new one. And this is what makes it difficult because you get a piece of news, nothing happened, just slop, 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 and then you had this massive amount of volume kick in. So you had to be real cautious about it. But at this point, it looks to me like they are running it lower to we have a lower edges here at 61.90 and the 61.50s. They took out the lower support there as the 62.50s, and we'll see if they can if they're gonna stay below it or not. If not, probably see a retracement back to that value at 63. But I would look to buy weakness down here to the 61.90s and the 61.50 to 60s for rotations back up again. Sometimes when you get this kind of weird massive move like that, you tend to get the retracement towards the mean, towards the starting point. Unless there's something more specific going on, that's when you get more continuation. But this doesn't look like it. It looks like a piece of news or a headline or something came out and a reaction, and now they're retracing it. So still range bound on oil, traded as such. Right now we are down here testing the lower edges, and you can see in the bigger picture what that looks like. Let's see, way over there. Yeah, so here's your oil capital flow. So we're just down here, these lower edges. They start taking out that 61.40 to 50s. Start thinking about the short side. I would give it a little bit of room. I would wait for them to take out 61 and then head lower. At that point, I would be more aggressive on the short side and do more of a go with type of trade. So that's oil. And then gold. Look at that nutty thing. That is nutty. So they took it higher. So they were building here. We were staying on the long side going into the overnight, but look at that starting point. I actually missed that thing. They took it way up there, all the way up to 3,900. Oops. They just shy. I don't think they hit 39, but they're just shy of it. So they up to 3,900 and then complete reversal. They run it higher, then complete reversal in the London session and took out the rally, took out yesterday's session, probed to the downside all the way down to that 38.20. I mean, this is like an overnight you wanted to trade, right? Unfortunately, I totally missed it. So I was not paying attention to the screens in the evening. I just check it in there before I turn in, but that was some crazy stuff going on last night, that's for sure. So they were down here bouncing off that volume edge, and that's what we talked about. They take that one out to 38.20s. Then we have a potential retracement going on. But look at that move. That is something. And chances are you couldn't trade it anyway. It was probably too volatile at the time. But you can see here how crazy that was. We had a big move out of the middle yesterday. Then this overnight also another pop, pretty good pop to the upside. And now retracement back to this attractor at 37.75 to 80s. The retest we looked at was this volume edge. So that is the one which held. And as long as that holds, we're probably going to stay above it. If they take it out, I would look for rotations right back here to the 37.70s. So that could be a nice retracement trade still in front of us. So I would be looking for that. So initially, I would look for short setups. I was going to say these two, but they would have taken them out. I would look at this level here, the 38.50s, 48 to 50s, maybe up to the 38.50s, potential short setup there for rotations down again. And this is just to early on here to see if that the strength is we're going to see some potential attempts to take this lower again. So a little bit of strength in the morning, and we'll see if they can get short for rotations down. I'm not going to be super aggressive. I'm going to wait for a pretty good setup before I get short. I'm not going to be aggressive on these shorts because overall everything on the gold is pointed higher. So, but the fact that they had this violent retracement in the overnight, it probably opens up the opportunity for maybe challenging this 38.20 edge again and maybe even taking it out. That would be more technical in nature, I would say. I wouldn't say that this doesn't mean that anything structural had changed on gold. It's just a lot of technical trading around it. So stay on the initially start off looking for that early weakness or try to get long against early strength, but look for weakness and see if they can retest that low. So try to get short against that early strength. We're looking overall for weakness to see if they can retest that low. Now, if they take out the 38.48 to 50s, and they start to keep going, I would just we may just be back on that long side pretty quick again. But I would consider these two levels for a potential short. Just no reason to be super aggressive about it. It's let it set up and get a good entry. Keep your stop tight if in case it keeps running, and so you just don't get caught again in a shitty trade. All right, back to the ES, and so far we're looking at this, and looks like we are in pretty good shape. So me see here. Yeah, everything's kind of where we left it. So we know how to get started. So stay range bound ES, range bound NASDAQ. Let's see how this whole thing develops. Remember, we are in the last trading day of the quarter and the month. And let's see how this whole thing shakes out. So good trading, guys. And I'll see you back at 11:30 for the next update. Oh, that didn't work. I had to learn how to spell in the morning. There you go. Hey, good trading. All right, guys, later.